Hi, good morning. Welcome to Morning Kappa. I'm Megan. Today is my turn. I'm Megan from Group Commodities. Today is my turn uh, to speak on future side. Just before we begin, I would like to highlight a brief disclaimer. Trading in futures and options involve a high level of risk due to leverage and may not be suitable for all investors. This presentation is intended for educational and informational purposes only and does not consist an invitation or recommendation to buy or sell any financial instruments. Please consult your licensed broker or financial advisor before making any trading decision. So let's begin. Well, looking at the broader market map for the week, we have a clear divergence in sentiment where we are maintaining a high conviction positive call on our core regional markets like FKLI, FCPO, and Hang Seng, of all which show strong bullish momentum. And conversely, we are adopting a neutral stand on the A50, Nikkei, and US equity indexes as this market appear to be consolidating. Well, in the commodity space, precious metal remain the absolute standout. They continue to exhibit exceptional strength, shattering historic highs almost daily. Aside from this shift, our outlook on all other asset classes remain unchanged from the last week. Well, KLCI surged 1.55% to close at 71.25 points. It's higher level in 7 years. And this broad-based rally was powered by aggressive foreign buying in heavyweights like Maybank, CIMB, and Public Bank. In the derivative space, the FKLI January futures reached an intraday high of 75.5, remaining a premium over the cash market that reflects strong investor conviction for the month ahead. This surge also aligned with the launch of Mini KLCI, which is a Bursa derivative actually launched on FKLM, which is a smaller contract to standard FKLI. It's called FKLM, which is launched on Monday. On a contract side, just 1/5 of the standard FKLI. This is actually to cater for retail investors that are looking for lower initial investment of, let's say, 800 per lot. The next product on our radar is FCPO, the crude palm oil. As of late, January 2026, the crude palm oil market is showing strong bullish momentum, with futures recently hitting a 2-month high at 4279 per ton yesterday. This rally being fueled by a significant 15 to 17% drop in January production due to seasonal low crop cycle and harvesting disruption from the Lunar New Year and Thaipusam holidays. And looking ahead, prices are expected to hold a strong floor at 4,000 with further upside potential driven by Indonesia upcoming export levy hike to 12.5% on March 1st. And there's a 55% probability of rains. These factors are due to the tightening global supply and making Malaysian FCPO increasingly competitive for major buyers like India, keeping the market in high interest range of, let's say, 4,000 to 4,300. Yesterday market actually is doing 4,002, so it's almost reaching whatever we are expecting of 4,300. But however, looking at the conversion, we are actually looking for more upside to, let's say, 4,500 to 700. So it depends. It really have when market take a breather, probably when investor can enter the market to ride on the trend. The next market that we're looking at on our radar, which is Hang Seng market. Turning to the Hong Kong market, the Hang Seng Index delivered a stellar performance today, closing up to 1.35% at 27,126 points. I would like to draw your attention specifically to this chart, as it is now the 4th time the market is attempting a major breakout from its long-term consolidation zone. If this 4th attempt is successful, there's a high possibility that the market will decouple from its recent range, However, any failure attempt to hold above this level will likely to see the index drop back to the familiar consolidation pattern. Well, before we move into our weekly market call, I have some exciting news to share. Monday, we made a high conviction call on, last Monday, we made a high conviction call on micro natural gas. And I'm thrilled to announce that we have officially hit our potential profit. And we successfully capture a 1:8 risk to reward ratio. And congratulations to everyone who took the trade. And following up on our second call last week, I would like to give an update on micro WTI. Yesterday night, market actually reached 62.5, and we also hit the target, and the risk and reward ratio is 1:3. So congratulations to anyone that followed our call last week on Wednesday on WTI. And now, this week, for our feature call of the week, we are shifting our focus to the agriculture desk with high conviction setup in soybean oil. We are entering at a reference price of 53.5, targeting a move up to 57.25. To protect our capital, we have placed our exit below 52. Looking at the mathematics of this trade for an initial investment of 2,310, we are risking about 900 to capture a potential profit of 2,250. This represents a professional 1 to 2.5 risk and reward ratio, offering a clean asymmetrical opportunity as the market builds momentum towards our target. Well, this position we haven't entered yet. This is a call for today. If let's say any market now is doing 54.22, if any chance of market retrace back to 53.5, well, trader could actually enter at around that price and with a target of 57.25. Hope that we can have another luck like the previous time. Well, that's all I have to share today. Thank you. Over to you, Joseph.
Right. Morning, everyone. Meagan on the weekly futures updates and also congratulates on the successful hit on the trades sharing. So let me continue on the our technical view on the Hang Seng Index. So far, we can see that the Hang Seng has been moving up steadily, climbing above this 20 days moving average. Right now, it's heading towards 2,400 point resistance. Now, what happened over the past 1 month? I think if you follow the Hong Kong or China news, you can see that on the political side of things, Xi Jinping have further consolidated his power, right? And we can see that the as the news break out yesterday, what happened is that the market have actually reacted positively, and Hang Seng have actually continued on the upside movement that shows that nothing must have changed fundamentally, right, in the market right now. And looking at the rates that is going, right, likelihood the Hang Seng will reach 2,400 and further move towards 38,000 point. Despite that, the downside support will continue to be the 20 days moving average, and followed by 25,600 point and 25,000 point. Now, although the Hang Seng market is actually moving up, right, we just have to dissect and drill down which are the counters that actually benefits on this recent mini bull run in the Hong Kong market. So for the past 1 week, we just select the price volume turnover and also the performance, right? Using this stock heat map by the trading view, we can see that the leaders, the 2899, which is a season goal, right? And also the 9988 Alibaba. Meanwhile, over the week, right, Xiaomi 1810 and also a 981 SMIC both actually experienced the profit taking. But despite that, right, the Alibaba, Zing, Pop Mart, as well as the three oil and gas counter managed to counter the losses that by these three counters and lift the index higher, right? So you can see that the team are actually quite clear in the market right now, right? For the tech stocks, market is really looking for Alibaba to spin off their AI arm, right? And looking at that, market is actually going into some of the data center and some of the AI related story in the Hong Kong market right now. That's number one. And number two, due to the gold prices actually moving upwards, so investors are looking for opportunities to ride on this boom in the precious metal. That's why you see that zinc shares actually went up. Now, apart from that, we can see that the pop mart have also complete their recent sell-off, have a very strong rebound. Okay, and recently one of the very big cap counters 9961 Trip.com experienced a very large sell-off due to investigations by the regulators on the monopoly practice, but you can see that the stocks have actually rebound from their 1 month low since then. As of today, we'll be looking at two counters in our trading stocks. Firstly, GDS, the leader in the online server. The counter have a break past 44 Hong Kong dollar, gap up yesterday, and overnight on the US market, GDS also have returned a positive price actions. Hence, this morning, I think that 9698 should potentially move towards 48 and followed by 52. Hong Kong dollar, right? On the downside, support is market at 40. Secondly, we have Trip.com. It's actually staging a very strong counter trend rebound right now, climbing above 490 and moving towards 520 and followed by 550. Downside support is market at 470. Okay, we have two stocks this morning. Number one, the Hang Seng Tech Index member, GDS 9698, and followed by the Hang Seng benchmark index, the Trip.com 9961. Okay. Apart from Hong Kong market, let's take a look at the macroeconomic indicators. We just take a look at the DXY, right, barometer for the US dollar. And we take this US dollar DXY, right, against the world currencies, right? Most of them I'll be using USD, INR, USD, JPY, USD, right? Everything is under the USD, even a USD GBP, right? We can see that for the last 2 weeks or about 7 trading days, right? The DXY have actually went down sharply, right? That's the reason why recently you see the ringgit have actually appreciated so much, and you can see that we are looking at 1 year, about 6 months time frame from June last year until today, right? You can see that the ringgit have went up by 7% against the dollar. Now, in fact, for the last 1 week, apart from the ringgit have that sterling performance, right? We also have this yen, right? The JPY have also actually jumped quite a lot against the XY, right? So this is actually you can see that one thing, one of the macro thing that is happening around the world right now. So if you look at the currencies, right, I think for the last 6 months, the best performed currency against the dollar will be the Aussie dollar and followed by ringgit, and then by the euro dollar. Okay, so these are the top three perform currency right now for the past 6 months. As for the 10-year yield, right, if you look at the world government bond yield, right, we just take a 10-year as a benchmark. You can see that right now, Malaysia, our government is borrowing at a cost of 3.5%, right? Meanwhile, the Aussie government have to pay slightly higher. They are paying about 4.83%. If the government were to lend on the 10-year bond, and the cheapest right now is actually the China, right? Their benchmark, which is a 10-year government yield, is actually at 1.8% right now. So for the past, I think 2 months, what the market has been saying is that the Japan bond yield have actually moving up. Right now, the Japan bond yield initially was the cheapest among the world, right? Right now, has creeped above the China and also the Singapore, and right now it's the third cheapest among the world right now. So actually, what is the implications? If you look at all these 10-year bond yield, all these 10-year bond yield will be very important, because this is what the analysts will use this as a benchmark. This will be the base rate, and then from here they'll add on the market risk return, and then using the interest rate, the analyst is going to discount on the listed PLC companies, and that's where they derive PE numbers on each individual counters. So with all the different bond yield, right, that also shows that, example, that you are buying a tech stock, right? A tech stock in US, we have a different PE number. Your tech stock in Malaysia, because essentially you can see that Malaysia, right, and the US bond yield is actually quite a different number. Okay, so looking at the macro of things, all right, despite that the currencies have a very strong movement, right? But we still can see that US 10-year bond yield are quite steady at this juncture. Now, if the bond market go haywire, what happens is that the fund manager will tends to dump the bond, and secondly, they will also take profit on the equities market as well. But despite that, the currency have very, I would say, a strong movement right now. The bond market appeared to be rather steady so far, right? So hence, for S&P 500, what you do see is that the index continue to move up higher. Despite that, I think everyone were asking, is the US tech bubble is going to be happen soon? But based on what we see on the bond market, based on what I see on the bond market, and also the index performance, I think that the equities market continue to be on risk on right now. That also in tandem with Barnabas' outlook, that report that I've shared, I think about 2 weeks ago, that the world this year 2026 risk on engine will be on the full throttle. Okay, and as for the US market, for the past 1 week, right, we can see that funds continue to pile into the memory counters, Micron, the SNDK, right, the Seagate, as well as the WDC. In fact, Seagate yesterday have announced their result, and the result have above expectations. And overnight, Seagate have went up 6% on the after market close. Right, despite apart from that, right, Intel have went into a topsy-turvy movement, right? Went up initially, but after the result, actually have a strong gap down. But overall, you can see the trend remains intact so far, right? Apart from Intel market, also actually looking into the chip manufacturers like in NVIDIA and also AMD, which AMD have went up by 11% over the week, right? Apart from the memory and also the fab counters, what we do see is the data center related counters have actually went up over the week as well. like one counter called Corning. Yesterday have actually gap up after it got a contract from the Meta. Then on, we also see Amphenol, one of the E&E player, went up by 10% over the week. I think in the US market, one of the easiest way to screen your stocks is actually you go to this trading view using the stock heat map. You just turn on some of the settings. Like over here, I just pick price volume over the week, performance over the week, right? And then on, I can see which are the trending stocks so far at the US market right now. Okay, so I can see that a few teams that actually are playing at the US market. And as for today, right, I'll be looking at Western Digital. Reason very simple. Yesterday, the CDN have released their result, and that will be a Western Digital turn to release their result on the Thursday. Because there's a 2-day gap here, right? I think since they are in the same industry, likelihood I do expect that Western Digital to deliver a same set of results. Now, despite that, I look at the Western Digital. The share price have a break past 245, and the downside support will be at 220. Now, if what we expect turn out to be positive, on the upside, it could climb towards 270 and followed by 300. Now, secondly, applied material, right, also have went up, break past 330, right? One of the peers, Lam Research, is going to announce the results tonight, Wednesday, right? Subsequently, I think a few days later on will be applied material. I think it's too late to trade on the Lam Research, but it's just still very timely. I would say have a few days ahead to trade on the applied material. So it actually break out 330, and the next level will be a 355, and followed by 330, and also support is 300. So I think that right now, what we do know is that the US is actually encouraging the semiconductor to invest in the US soil, right? I think the demand on the semiconductor equipment will be will be strong right now. So let's watch what happened on the Lam Research and also the applied material, and especially their guidance after the results are announced tonight. Okay. Apart from that, I think over the last 1 week, now FKRI have performed quite strong, right? Due to a very strong ringgit, right? It has actually break past our 1750 resistance yesterday. Now, right now, heading towards 1790 and followed by 1820. At this juncture, 1772, we are not far away from the psychological level 1008, right? I think let's see whether tweak our benchmark futures can reach 1008 and above. Despite that, our downside support will be at 1690. Okay. Now, FCPO have a very strong performance lately due to the hike in their peers, the sunflower oil, right, and also the soybean oil start to actually move up higher, and as the soybean oil appeared to be slightly expensive than CPO right now, I think market is actually expect the importers like India to start to actually import FCPO due to their price slightly lower than their soybean oil right now, right? Apart from that, also thanks to the hike on the sunflower oil, right? For the past 1 week, right, FCPO have a very strong flow, and they have managed to climb above the 200 days long-term moving average line right now. Okay, the R1 will be at 4003 and followed by 4004, and then on the downside, S1 4001 and followed by the 4000, which is the S2. At this juncture, we keep bullish bias on the FCPO unless it breaks the downside stop loss point. On the Malaysia equities market, right, we can see that over the last 1 week, Maybank, Public Bank, CMB have lifted our index higher, together with Tenaga as well. I think one of the counters that retail investor slightly missed a bit is actually the brass metal. So that brass metal has been moving up from I think 4 ringgit all the way to 7 ringgit due to a very strong positions on the aluminium price, right? Apart from that, brass metal have managed to have ventured into the upstream on the securing the alumina. Right now, I think due to the commodity market boom, right? I think the metal market is actually very hot right now. Right, apart from brass metal, you can look at the China 2622 China aluminium share price also actually moving up lately. Okay. Secondly, the I think Asia X and also Capital A both have actually close to complete their restructuring exercise. Over the week, I can see that Asia X after did their placement, share price actually went up by 33%, and Capital A, right, is on the verge of coming out of PS17, rebound by 13% over the week. And you look at all the sectors, I think one of the lag we saw this year, 2026, was property, and property also managed to stage a very strong rebound, led by the SP Setia and also Sun Dhabi and also UMS as well. Right. Apart from that, some of the laggard, like the consumer stocks, Mr. DIY also went up by 10%, trying to close the gap between Mr. DIY and also Speedmart. 99 Speedmart. Then on Sun Dhabi, famous for their dividends, have also went up by another 5% over the week. Generally, sentiment remains bullish in the market, and I urge all of you to continue to follow our report, be it retail or also the Insti report. And I think the market have reacted very positively to all the report that we have issued so far. Okay. And as for trading for this morning, we have the Eco development that break past 2 ringgit and 26, going to 237 and followed by 248, down support 215. 99 Speedmart breakout from 3 ringgit 95 going to 4 ringgit 15 and followed by 4 ringgit 35, down support 3 ringgit 75. Sunrise breakout from 68 cents heading towards 73 and followed by 78. And lastly, Hume Cement Industry breakout from 3 ringgit and 55 cents, testing 3785 and followed by 395. So we have the property counter, Eco development, Sunrise, and the retail count, the consumer counter, 99 Speedmart, and last but not least, building material, Hume Cement Industry. So I'll stop here and I'll pass on to Adam on the construction sector update. Thank you.
All right. Good morning, everyone. We have a ground checks note for the construction sector. Let me just share my screen. Okay, yeah. So we actually was driving around Nilai Impian area and we stumbled upon a data center construction site. And looking at the notification board, the contractor for the data center is Kajima, but the owner or the developer was not disclosed. We're not entirely surprised given that last year, the Chief Minister of Negeri Sembilan mentioned that there were going to be 2 DC developments in Negeri Sembilan, one in Port Dickson, which is to be developed by Gamuda, and the other one is in Nilai, which is by a US based investor. And looking at how things are progressing, it seems to be quite on track. If you see in the pictures over here, and based on data that we saw from CIDB, looking at projects in Negeri Sembilan, they actually listed that there was one DC project worth 610 million ringgit, which was awarded to Kajima, but we're not too sure whether this is the same project that we cited, but it could highly likely be it. But anyways, on top of this data center project and also the one in Port Dickson, which is likely going to be built by Gamuda, we also acknowledge that there was a groundbreaking ceremony sometime on Monday this week for a data center called the Nexus Young Data Center somewhere in the Malaysia Vision Valley 2.0. So, all in, we think that Negeri Sembilan would be another potential data center hub aside from Cyberjaya and Johor. And we think that the water resources continues to be rather manageable given that Gamuda itself in Port Dickson will be building a water treatment plant for the purpose of the data center in Port Dickson, and around 25% of that water treatment plant capacity would be used for the surrounding residential area. So we continue to see that there is still room for the DC space to expand in Malaysia and hence provide more job opportunities for contractors in Malaysia. So that's all from me today. Thank you for joining in at RV Morning Kappa at 8. We will see you tomorrow at the same time, same place. Have a good trading day and bye-bye.